The Dow 30, S&P 500, and the Russell 2000 all close at record highs on Friday with solid weekly gains, shrugging off the government shutdown and weak private jobs data. The NASDAQ ends lower as Palantir and Tesla drag down tech stocks, breaking its winning streak even as AI and semiconductors remain market leaders. And Wall Street enters October's famously volatile stretch, flying blind because the government data is shut off for now, and we will see if it comes back sometime this month. Stay with us. CB3 Financial's weekly podcast begins now. It was another week of milestones for Wall Street, led by bullish momentum in the Dow and the S&P 500. Both indices secured all-time closing highs on Friday and extended their winning streaks to 6 days, posting weekly advances north of 1% despite the start of the government shutdown on Wednesday. The Dow surged 239 points, 0.5% to a new high. The S&P did the same to a new high. The NASDAQ tumbled, but the Russell 2000 also closed at a lifetime high. This resilience came as investors discounted disruptions from Washington and data delays, with the shutdown preventing the key release of key reports, including September's non-farm payrolls. Instead, markets turned to private surveys where the ADP employment report showed a 32,000 job decline, which should add to the calls for the Federal Reserve easing rates. Elsewhere, defensive assets rallied like gold, $3,800 an ounce, capping its best September since 2011 and drawing flows as an inflation hedge. Healthcare stocks also outperformed, with Eli Lilly and AbbVie seeing strong demand from investors seeking stability. So what are the highlights? The government shutdown. This is only the 15th U.S. federal shutdown since 1980. That's 45 years. It began on Wednesday, suspending release of jobs reports, inflation data, and other critical market data. So in some ways, we're flying blind going into this week, but we have to work with what we have. So investors instead relied on private indicators and sentiments with little visible panic as stocks notched historic gains. You can't really get too upset if we don't have the market data we're used to having when the market continues to say, we're going to shrug that off and make new highs. So the ADP employment report showed the sharpest private payroll decline since 2021. While traditionally less market moving, this particular report became very central this week because the BLS, the Bureau of Labor Statistics data, means investors and Fed officials alike are flying blind into their October meetings until they get this data. All right. So tech enthusiasm persisted in the early week, but gave back some profits on Friday. Not concerned about that. I'm recording this on Sunday night. Markets are already up higher overseas. So I expect to see continued semiconductor strength, including Nvidia's market cap topping $4.5 trillion. Folks, that is astounding for one company. Powered by the bright spot, of course, of AI development, and that excitement continues. So looking ahead, October's volatility challenge. October, if you think back to the October crash of 1987, another notable October crash was Lehman Brothers in 2008. And this extra uncertainty from the ongoing shutdown, missing data, and then the approaching Federal Reserve meeting, they're going to be flying blind. I just don't expect the markets to be phased, folks. The undertone of this market is it's going to go higher. People are going to buy the dips no matter what. That's why we are staying fully invested in every program we trade. So the Fed meeting, expect the minutes and speeches from Chair Powell to hold unusual sway, while concrete jobs and inflation numbers simply remain absent, putting extra emphasis on forward guidance, and that's going to come from the Fed. So until the data comes back, until the shutdown of the government ceases, we're going to be flying essentially without radar. And it's worked so far. We've done this in the past. I'm not concerned about it, folks. We remain fully invested. So earnings season, that's really what drives the market, and interest rates, right? It kicks off with major names like Pepsi and Delta showing their third quarter results. We're in the fourth quarter. We just began it. So now we're looking back and getting results for the third quarter. So this guidance will be closely watched in lieu of any Fed data, any Bureau of Labor Statistics data, because the government is shut down. So sector rotation and defense, expect continued rotation into healthcare staples and value names during this month. But once we get to November, historically the strongest month of the year, I expect tech, industrials, consumer discretionary, and other aggressive sectors to once again be in the lead. So with record highs in place and markets buoyed by optimism, this October could see sharper swings than normal as participants navigate this ambiguity and search for new catalysts in the absence of traditional BLS or Bureau of Labor Statistics indicators. Thanks for listening. It's been the weekly update. We'll be back next week. The CB3 Live episode normally airing on October 9 has been delayed for 1 week because of a personal medical situation in our family, but I'll be with you next weekend and then again on Thursday, the 16th. Thank you so much for listening. We'll see you next time.